Listen up, because I'm about to tell you about a company that's got income investors drooling. It's called NextEra Energy Partners, or NEP, and it's a dividend-paying machine. We're talking about a massive 15% yield. That's right, 15%. You'd be hard-pressed to find a yield like that anywhere else in the market. But here's the kicker. NEP isn't just some fly-by-night operation. It's a subsidiary of NextEra Energy, a renewable energy giant. That means NEP has a strong parent company backing it up, and it means NEP has access to some of the best renewable energy projects in the country. We're talking about wind farms, solar farms, and other clean energy assets. These assets generate steady, reliable cash flow, and that cash flow is what fuels NEP's juicy dividend. So, if you're looking for a way to boost your income and invest in the future of energy, NEP is a name you need to know. Keep reading, because I'm about to break it all down for you. Let's talk about that 15% yield for a minute. That's not just a high yield, it's a head-turner. It's the kind of yield that makes income investors sit up and take notice. Think about it. If you invest $10,000 in NEP, you're looking at $1,500 in annual dividend payments. That's $125 per month. That's real money that you can use to pay your bills, reinvest, or treat yourself. Now I know what you're thinking. A yield that high must be too good to be true. And you're right to be cautious. High yields can sometimes be a sign of trouble. But in NEP's case, I believe the yield is sustainable. Why? Because NEP has a strong track record of dividend payments, and it has a clear plan to grow those dividends in the years to come. NEP isn't content with just offering a high yield. This company is committed to growing its dividend. In fact, NEP has a stated goal of increasing its dividend by 12 to 15% annually through 2026. Let me tell you, that's huge. Most companies would kill for that kind of dividend growth. It shows that NEP is confident in its ability to generate strong cash flow, and it shows that NEP is committed to rewarding its shareholders. This commitment to dividend growth is one of the things that makes NEP so attractive to income investors. It means that your income stream is only going to get bigger and bigger over time, and with inflation still running hot, that kind of dividend growth is more important than ever. It helps you protect your purchasing power and stay ahead of the curve. Now let's talk about why NEP is so well positioned for growth. It all comes down to one word: renewables. NEP is a major player in the renewable energy space. They're not just dipping their toes in the water, they're diving in head first. As I mentioned earlier, NEP owns a portfolio of wind and solar farms. And these assets are located in some of the best wind and solar resources in the United States. That means NEP can generate a lot of clean energy, and it means NEP can sell that energy at a premium price. But NEP isn't stopping there. They're constantly looking for new opportunities to expand their renewable energy portfolio. They're investing in new wind and solar projects. And they're even exploring other clean energy technologies like battery storage. This focus on renewable energy is a smart move by NEP. Why? Because the demand for clean energy is only going to increase in the years to come. Section 5, navigating the risks, debt, and interest rates. Now, I know what you're thinking. No investment is perfect. And you're right, NEP does face some risks. One of the biggest risks is the company's high debt levels. NEP has taken on a lot of debt to finance its growth, and that debt could become a problem if interest rates rise sharply. Another risk is the potential for government regulation to change. The renewable energy industry is heavily reliant on government subsidies and tax breaks. If those subsidies and tax breaks were to go away, it could hurt NEP's profitability. But here's the thing, NEP is aware of these risks, and they're taking steps to mitigate them. For example, NEP is working to reduce its debt-to-equity ratio, and they're lobbying the government to maintain its support for renewable energy. So, while these risks are real, I don't think they're insurmountable. NEP has a solid plan in place to address them, and I believe the company's long-term growth prospects outweigh the risks. Section 6. Undervalued and poised for growth. Despite its strong fundamentals and positive long-term outlook, NEP's stock is currently undervalued by the market. That's right, undervalued. This means that you have the opportunity to buy a great company at a discounted price. How can I be so sure it's undervalued? Well, let's look at the numbers. NEP's price-to-earnings ratio is significantly lower than its peers in the renewable energy sector, and its price-to-book ratio is also attractive. This undervaluation presents a compelling opportunity for investors. As the market wakes up to NEP's potential, I believe the stock price will rise significantly, and when that happens, early investors will be rewarded handsomely. Section 7, a bright future. Renewable energy is here to stay. Let's face it, folks, the future of energy is renewable. The world is moving away from fossil fuels. and it's moving towards cleaner, more sustainable sources of energy. This is a megatrend that's not going away. NEP is at the forefront of this energy revolution. They're building the infrastructure that will power the world for decades to come, and they're doing it in a way that's good for the environment and good for business. Investing in NEP is about more than just making money. It's about investing in a cleaner, more sustainable future. It's about being a part of something bigger than yourself. Section 8, don't miss out, invest in NEP today. So, there you have it. NextEra Energy Partners, a high-yielding, dividend-growing renewable energy powerhouse. This is a company that checks all the boxes. If you're looking for a way to boost your income, invest in the future of energy, and make a difference in the world, NEP is the stock for you. But don't just take my word for it. Do your own research. Talk to your financial advisor, but don't wait too long. This opportunity won't last forever. Jump on board the NEP train and ride it to a brighter future.